Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks. So stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts and covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm on the scan tab and I'm going to be scanning the S&P 500. So I'm going to be looking at all of the stocks in the S&P 500, and now we have a list of all of those stocks sorted by highest implied volatility at the top and then descending from there. It's important to keep in mind that this is after hours data, so some of this may look different when the market opens or when this video comes out. At the top of the list, we have Super Microcomputer, which is one that we've looked at quite a few times. So I'm going to go ahead and skip this one, but let's go ahead and take a look at a different stock. Let's go ahead and look at Enphase. It's one we haven't looked at in a while. Looks like it has earnings coming out on February 4th, currently trading at about $69 with an implied volatility of about 84%. We can go ahead and jump over to the trade tab and look at the kinds of premium it is currently paying out. I'm going to be looking at the 8 days out options, so options expiring next Friday. Before I jump into cash secured puts and covered calls, I just want to call out this custom column that I have on my options chain. It quickly calculates the percentage profit for selling a specific strike price. So for example, if you were to sell the $66 cash secured put, you would make about 2% in profit in terms of the premium you would get paid versus the risk if you did get assigned. If you're interested in adding this column to your own platform, then check out the link in the description where I have free instructions on how to add this to your own trading platform. Now let's go ahead and start by looking at cash secured puts. It looks like you could make about 1% selling the $63 cash secured puts, which means you would make about $63 to $65 in premium. But your risk here is if you did end up getting assigned on the position is that you would need 63, which is the strike price, times 100 because each option contract equals 100 shares. So you would need $6,300 in order to purchase 100 shares if you did end up getting assigned. If you wanted to make a higher percentage profit or a higher amount of premium, you could sell a strike price that is closer to the current stock price. So in this case, if you wanted to make 3%, you would need to sell the $68 cash secured put, but there's probably a much higher chance that you get assigned on this position because it is closer to the current stock price. Jumping over to covered calls, it looks like you could buy 100 shares right now for $6,966 and then go ahead and sell the $70 call options and make about $272 in premium or about 3.96%. And that's just selling one covered call option. If you had the ability to buy more shares, let's say 500 shares, then you could sell 500 call options, which would be over $1,000 in premium. But again, that would require you to buy 500 shares because each option contract is equal to 100 shares of the stock. Let's go ahead and jump back to the scan tab and look at a couple more. Let's look at Palantir. It's definitely been on quite the climb in the past few months. Looks like it has earnings coming out on February 3rd, and it's currently trading at about $68 with an implied volatility of about 83%. Let's go ahead and jump over to the trade tab and look at the kinds of premium it is currently paying out. Starting with cash secured puts, it looks like you could make about 1% selling the 62.5 cash secured put. This means you would make about $56 or around $58 in premium for selling this cash secured put. And the risk here is if you did end up getting assigned, you would need $6,250 in order to buy 100 shares if you did end up getting assigned on this position. On the covered call side, similar to Enphase, it would cost around $6,823 to buy 100 shares, but then you could go ahead and sell the $69 call options and collect about $216 in premium or about 3.18%. Jumping back to the scan tab, let's go ahead and look at one more. Let's go ahead and look at Tesla, another stock that's definitely been in the news recently. Looks like it has earnings coming out on January 29th, currently trading at about $394 with an implied volatility of about 71%. Let's go ahead and jump back to the trade tab and look at the kind of premium it's paying out. This is a much more expensive stock, so it will require more capital on covered calls and if you got assigned on the cash secured put. Starting with cash secured puts, it looks like you could make about 1% selling the 367.5 cash secured put, which means you would collect about $390 in premium. But your risk here is if you did end up getting assigned, you would need $36,750 in order to purchase the 100 shares. On the covered call side, it looks like you could buy about 100 shares right now for $39,494, which is pretty expensive compared to the other two stocks that we just looked at. But then you could go ahead and sell the $395 call options and make $1,420 in premium, or about 3.62%. This is a more expensive stock, so the premium is also higher. And again, if you had the money, you could do more than one option contract, either on the covered call side or on the cash secured put side. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of S&P 500 stocks sorted from highest implied volatility at the top and then descending from there. If you have any questions or comments, feel free to leave that down below and I'll make sure to respond. And as always, if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next video.